Your true wealth is your time and freedom. Money is just a tool for trading your time. It's a container to store your economic energy until you're ready to deploy it.
10 dominoes lined up on a table, and you have 2 observers. One observer, Joe, sees all 10 dominoes from the beginning of the experiment. The second observer, Sally, can only see 1 domino, the 7th in the series. Looking at domino number 7, Sally can still make plenty of observations. It appears stable, for example. It also appears just as likely to fall in one direction as the other. She can study it for years, and she can assume it will never fall. On the other hand, Joe sees all 10 dominoes, including number 7. So one day a force comes along and tips domino number 1 into domino number 2. At that moment, Joe can tell you with near 100% certainty that domino 7 is about to fall. Sally, on the other hand, continues along blissfully unaware, yet with total expertise when it comes to domino number 7. She just can't see how it fits into the system of dominoes, and she can't see the inevitable event coming. When domino 7 falls, Sally is caught almost completely unaware. Well, in essence, Sally represents the mainstream economists and media pundits.
The hidden secrets of money, some of them are hidden in plain sight. They're like right in front of you. The way the monetary system works is something that isn't actually hidden away from all of us. It's out in the open, but it's complex and people just they can't see how it works.
What exactly are special drawing rights?
So the IMF has invented something called special drawing rights, or SDRs. From inception, the IMF intended for SDRs to replace the dollar as the new reserve currency.
The time bomb that no one is looking out for is the imminent collapse of the American currency.
When the next crisis hits, we'll see SDRs taking center stage and replacing the dollar for major transactions between banks, businesses, and billionaires. Basically, they want to classify BlackRock as too big to fail. The technical term is Systemically Important Financial Institution, or SIFI. If your bank gets the SIFI label, it means the government will bail you out first in a crisis. But it also means you must turn over control of your bank until the crisis subsides. One firm controls more money than the GDPs of China, Russia, and Japan combined. They'll be able to freeze BlackRock when the crisis hits. BlackRock clients won't be able to sell. They won't be able to buy either. Their accounts will go dark indefinitely.
How would such a freeze actually work? And wouldn't that be highly illegal?
Well, it wouldn't be illegal technically because they've been quietly laying the groundwork for years. Here in the U.S., for example, Congress pushed through something called the International Emergency Economic Powers Act, or IEPA. This allows the government to freeze accounts, assets, even whole institutions at will. Now someone just needs to flick a switch and they'll impose ICE 9 rapidly.
We could freeze global markets for this transition. That economic freeze scenario is on the table. That is what I mean whenever I say flip the switch. The global economy has been on pause. People are unemployed, searching for answers, not asking the right questions. They don't know where to look. They know money's there to be made, but they don't understand where exactly it is.
When the elites refloat the system, they won't do it with US dollars. They'll do it with new world currency. I'm talking about the official currency of the IMF, special drawing rights. They'll refloat the world financial system by issuing mountains of SDRs to governments and international institutions worldwide. The dollar will get left out of the new equation. And Americans will wake up to a new post-dollar reality just 48 hours later. Here's the final twist. They won't be issuing any of these SDRs to individual Americans. We'll be left with dollars, which will become like our version of the Mexican peso. All we're waiting for now is the big domino.
When the mighty dollar falls, the devastation will be severe. Its position as a global reserve currency gives the United States significant economic and political leverage, including such benefits as lower borrowing rates from other countries, which positively impacts both the government and the American population. But as the dollar crashes, the United States will experience serious economic pains, and another currency will have to fill the vacuum left in its absence. One potential solution is that a reset could be implemented, which means that all nations would need to agree upon a new global currency system. The last time this happened was during World War II. It is difficult for people to imagine their national currency falling by the wayside. But historically, any fiat currency not backed by gold or silver has failed. It seems to be an inevitability. With the Fed injecting capital wherever and whenever it sees fit, financial assets are becoming ominously overvalued. With liquidity at a minimum, debts will compound and loan risks will skyrocket. If they walked back their aggressive policy now, it would signal concern and trigger mass consumer panic, causing a catastrophic collapse.
The market is like a drug addict waiting for its next fix of stimulus.
Like it or not, the future of the dollar has become anchored to confidence in financial markets or lack thereof. In March, foreigners reduced their exposure to the US dollar by $227.9 billion. The same month, the United States recorded a trade deficit of $44.4 billion. Take note of these statistics because one of the defining market factors that has historically preceded the collapse of a fiat currency is the selling off of the currency by foreigners that hold it.
There are no free markets anymore, meaning it is not market but a forced bubble upwards by the Fed via BlackRock. The Fed steps up, pushes a button, imaginary money is printed, and the markets are saved, again. Scam. I wouldn't put a penny in there. This fake stock market is being held afloat by the Fed pumping trillions of dollars and keeping interest rates at almost zero. This market is going to crash, and millions will lose their shirts.
Any way you spin it, the desire to sell US dollars will only increase as the crisis goes on. If things were to crumble in this way, as the US dollar tumbles into a freefall and politics complicate matters further, questions will turn towards the US government and the Fed. The monetary policies they're pushing are far from successful. Upon this realization, consumers will only drive the value down further, rejecting the paper money. As cryptocurrencies rise in popularity and in use, more individuals may begin to consider the risks and weaknesses of traditional fiat currencies that are not backed by gold or silver. Furthermore, as old standard cash and checks are increasingly swapped out for digital payments, all in all, it is clear that recovery will be much slower than originally anticipated. Even still, there were enough new people losing jobs over past weeks to more than double old records. The latest reports bring the grand total of U.S. citizens who have filed claims for unemployment benefits since the start of the health crisis to almost 46 million. The bigger picture remains grim.
The Federal Reserve announced it would begin purchasing individual corporate bonds as part of its emergency lending program to inject liquidity into the virus-stricken economy. The Fed basically promised to backstop every shitty credit company in America and zombify the US economy. So a zombie corporation with flat or declining revenues can now sell its worthless bonds to the Fed, take the freshly created funny money and use it to back shares of its own stock, thus driving up the price. This is an oligarchy in plain view. The Fed Reserve is the only buyer of treasury bonds for the first time in history. And now we have unlimited QE.
Jeremy Grantham, a British investor known for his anticipation of various bubbles, recently shared his thoughts on the impending stock market crash. According to Grantham, the U.S. stock market has been pushed into an unprecedented situation as a result of the pandemic, and we will soon see the bubble burst. When asked what level of exposure investors should have to U.S. equities, the bearish investor was blunt. His answer? Zero. This time around, the Fed has falsely inflated the value of equities by injecting significant flows of money into the pockets of American consumers. Now, the rate at which the economy is crumbling is unlike anything Grantham and other experts have seen before. This reality, paired with the fact that there were already countless economic problems compounding before the health crisis and subsequent lockdown unleashed the worst of their effects, make for a perfect storm. Grantham, over the course of many years watching the stock market, said that this could very well be the most destructive bubble he has seen in his career. Grantham's extreme bearishness stems from the fact that, as he put it, the market and the economy have never been more disconnected. Meanwhile, however, the U.S. economy itself is in at least its worst 10%, possibly even lower. Global economies were already facing plenty of pre-existing problems before the pandemic struck. For as long as the U.S. government is propping up businesses and its citizens with flows of printed money, investor confidence and market prices will seem to be back to normal. The statistics we're seeing now are far worse than those recorded during other financial crises. Grantham warned that the help provided by central banks throughout the pandemic and the more than generous stimulus packages have now made inflation a serious risk. Other big names agree with Grantham's dire predictions. On the other hand, amateurs are throwing money into stocks at a record pace, particularly through apps like Robinhood. According to a survey released by Bank of America, 78% of respondents said the stock market is currently being overvalued. Since the survey began asking the question in 1998, this is the highest percentage of respondents who answered so negatively. Clearly, Grantham is onto something, and a stock market crash is on its way.
Who else would lay down billions in this environment with all this risk for 2 to 3%? Accountability for companies is no more. Yet markets go up every day with promises, lies, and no fundamentals. It would be like an abandoned ship just sailing alone. It is going to be fun watching them jump ship when the bow turns downward. The Fed doesn't have any money, they are using money from the Treasury. This is going to end bad. What Fed is doing pumping stock market will result in Costco toilet paper more expensive than the US dollar paper. The Fed is now like the crack the market can't live without. It is okay for Social Security to collapse, cheating Americans out of money they have paid in their whole life. But we have an endless supply of taxpayers' money to buy corporate bonds. Pump it up, Powell. In the end, we will have bankrupt companies with record market values, low value US dollar, and the wealthy 1% even wealthier. As the Fed prints more money, it goes into assets such as stocks, bonds, and real estate. Those with capital get richer. Working class people who depend on their labor and not on capital get poorer. So retail sales were down a record of 17% in April, but the phony market was rallying huge because the crooked Fed was buying ETFs tied to the S&P, Dow, and Nasdaq. What a con game this is. I never want to hear again that we are a free market economy and the US is not a socialist society. The market is moved by the Fed, not by the performance of the companies. The Fed can pump a year's worth of money into the system. Debt will never replace sales. US companies will just go deeper and deeper into debt as long as the Fed keeps the money flowing. Once intervention occurs, it gets worse and worse because there's no more mother of invention to bring on to create new jobs to replace the old ones the government is trying to protect. But it is inflationary. More money into the same GDP implies it costs more for the same stuff. I am sick of hearing, keeping the market up. It is surely not because they want to protect jobs, as nothing they have done so far has stopped job losses. We are literally using taxpayer dollar to prop up high-risk investments and provide golden parachutes for the CEOs. In the coming years, the rally cry won't be against systemic racism. It will be against the concentration of money and power into the hands of the few. That is where the real battle lies.
The correct answer, ladies and gentlemen, is this XRP gold standard reset. It is the fact of what I see playing out in real time. Whether you believe me or not, it doesn't matter. All I ever ask you to do is to stay vigilant and to buy XRP while you still can.
The market is like a drug addict waiting for its next fix of stimulus.
Its position as a global reserve currency, when the mighty dollar falls, the devastation will be severe.
Defining market factors, the time bomb has falsely inflated the value of equities, the most destructive bubble. Historically preceded collapse of a fiat currency is the imminent collapse of the American currency. Level of exposure investors should have to U.S. equities? Answer: 0. As cryptocurrencies rise in popularity,